Welcome to this presentation about your federal benefits. Today we are going to review two aspects of the federal benefits: the FEGLI life insurance and your spouse survivor benefits. While overall the federal benefits package is an excellent program, it does have some cost considerations, especially as you get older and into retirement. Today we will take a look at those considerations. Let's take a closer look at your FEGLI life insurance program and the 5 options available to you. The basic coverage is required to be able to participate in the FEGLI optional benefits. Throughout this presentation, we will use an example of a federal employee with an annual wage of $76,500. Under the basic coverage, this worker would have a total of $79,000 in coverage. His wage of $76,500 rounded up to the nearest $1,000, plus $2,000, equaling $79,000. The cost for this benefit would be $11.85 bi-weekly. You pay 2/3 of the premium, and the federal government pays 1/3, unless you are a postal employee, in which case all of the premium is paid by the Postal Service. Your basic coverage amount increases until age 65, and at that time the coverage amount reduces by 75%, unless you choose the option to pay the increasing premium. The premium increase to maintain the full coverage amount is approximately 400% at your retirement. This is the first major coverage consideration. Your coverage will either have to decrease by 75%, or your premiums will increase over 400% to keep the full coverage level. Being aware of these future changes early in your career and exploring your options could save you thousands of dollars in future premiums into your retirement. The next benefit option is the extra benefit, and it is automatically included if you are enrolled in the basic insurance plan. The coverage amount is equal to your basic insurance coverage amount. The problem with this coverage is that it is provided at a time when you will probably never need it, and from age 35 to age 45, the coverage decreases annually until at age 45 the coverage amount is zero. The next option is option A. Option A is a level benefit of $10,000. The cost of this coverage increases every 5 years, and as you can see by the following graphic, the increase is significant as you get older. Over your working years, you could easily pay more in premiums than the actual coverage of $10,000, and then at age 65 the coverage decreases every month until you are left with only 25% of the original coverage amount. This decrease comes at a time in your life when you are more likely to need the benefit for your family. Let's now explore the option B coverage. With option B, you can elect to have 1 to 5 times your annual wage in life insurance coverage. This coverage has some future problems as well. At age 65, you either have to accept a reduced amount of coverage or keep the current amount and pay a significantly higher premium. This decision comes at a time when you will need the coverage the most and may or may not be able to obtain life insurance coverage from another source due to health conditions. Here is the cost per $1,000 of coverage and the annual costs as you get older. As you can see, the increases are very significant, and most federal workers are not able to afford these increases into their retirement. You are again faced with a coverage decision at the time in your life when you are more likely to need this coverage for your family. The overwhelming majority of federal workers find that this coverage is so expensive during retirement that they choose to drop the benefit. This could end up being the most expensive term insurance that you'll ever purchase. The good news is that you do have other options, which we will be exploring very soon. The final coverage option is option C, which is the option to include your spouse and children in the FEGLI life insurance program. Your spouse is eligible for coverage ranging from $5,000 to $25,000, and your children may have between $2,500 and $12,500 in life insurance coverage. As with other options discussed, the premiums are age-banded and increase significantly as your family members get older, leaving you with the same decision about whether or not you can afford the higher premiums, or will be forced to drop the benefit. As with the other options, if you cannot afford the future premium increases, you can elect to have the coverage amount decrease starting at age 65. Let's summarize your FEGLI benefit options. It is very affordable when you are young and not likely to need the benefit. All of the premiums are 5-year banded and increase at each age interval. Coverage is highest when statistically you are most unlikely to die unexpectedly. It is a term insurance plan and is not really designed to provide lifetime income protection. The benefit either goes away or becomes cost prohibitive when you are most likely to need it the most. You do have options available, and a properly trained federal benefits counselor can help you navigate through the maze of deciding what is best for you and your family. Let's explore the private life insurance program and its key benefits. First, you are in control, and when working with a qualified professional, you can design a plan that will not have the pitfalls that we discussed thus far. By properly planning, your benefits and premiums can be level throughout your lifetime, even into your retirement, with zero increases in premium. A private life insurance program will have cash value accumulation that can be used for emergencies or can be used for a supplemental tax-free retirement income. Many federal workers, when educated about the future costs and choices that face them, have chosen to implement their own private life insurance program and are saving thousands of dollars that they would have otherwise had to pay for the FEGLI benefits. In our remaining time together, let's take a look at the spouse survival benefit. There are two programs depending on when you were first hired as a federal worker: FERS and the Civil Service Retirement System. The FERS program is for federal workers hired after December 31st, 1983. Your federal benefit amount is determined by your length of service and your high three highest average pay. Some facts about the FERS program. If you choose to include your spouse, they can get up to 50% of your retirement income annuity amount. Once you make your election to include your spouse, you cannot change your election. It is permanent and the costs are expensive. The cost to include your spouse is 10% of your annuity benefit amount monthly for the rest of your life. This benefit is not portable, meaning that if you choose this option and your spouse predeceases you, the benefit cannot be given to another family member. All of your costs paid are forfeited forever and there are no refunds. It is important to make sure your spouse is also protected during retirement, but this option could be very expensive during your retirement years. As you can see, if you exercise the option to include your spouse in the survivor benefit option over 20 years, that option will cost you nearly $100,000. If your spouse passed away in the 19th year, none of those deductions can be recovered or passed on to your children or grandchildren. Once again, you are faced with choosing the best option for your family, and you do not need to make this decision without the advice and counsel of a trained federal benefits specialist. As was noted earlier in this presentation, you do have better options for managing this aspect of your retirement. The Civil Service Program is very similar with a few exceptions to the coverage amount available and how your costs for the benefit are calculated. If you are a civil service federal worker, your spouse is eligible for up to 55% of your monthly annuity benefit. The survivor benefit choice is permanent once chosen, and the cost averages approximately 9.5% of your monthly annuity benefit amount. The benefit may not be passed on to your children or grandchildren, and once again there is no return of deductions paid if your spouse predeceases you. As you can see by this example, the decision to include your spouse will likely cost you over $110,000 during your retirement period. In addition, if you live 20 years and pass away and your spouse begins taking their benefit and then dies, all of the costs paid are forfeited to the federal government. Your children and grandchildren do not receive any refund of those costs, once again making this one of the most expensive purchases you will ever make in your lifetime. One option to also manage the spouse survivor benefit is the private life insurance program. When properly designed, this option can provide you with a level life insurance benefit into your retirement and guarantee an income for your spouse should you predecease them, and then any balances in the program can be passed on to your children and grandchildren. In addition, the cost is much less and is level throughout your lifetime. If you're insurable, the private life insurance program is a much smarter choice for you and your family. Your federal benefits are worth hundreds of thousands of dollars, and without proper planning, could also cost you hundreds of thousands of dollars into your retirement. We will sit down together and design a plan that addresses all of these issues, and that puts you in control of your destiny and your future. Please take a moment to request your free federal benefits booklet and free customized federal benefits analysis. We look forward to assisting you on your journey of a happy, fruitful retirement.